Hey everyone. Hello, hello. So today is January 14th, and we are in day 13 of 90 for our 2026 tax talk. And today I'm going to be talking about joint tax returns when one spouse is a W 2 earner and the other one is self employed. Um, Tackling this because I'm actually working with a new client recently who came to us because she has been filing, Mary filing jointly. And she recently had to file an amendment because she didn't file taxes correctly once she started her salon. So, we're going to talk a little bit about that. So, before we begin, my name is Jennifer Drew. I am the founder and CEO of Hair CEO. It is a business advisory and accounting firm helping self employed hair professionals and hair business owners run legitimate businesses, profitable businesses, and bankable businesses. And we do that through coaching, accounting, bookkeeping, and tax services. And so, really, in this series that I'm doing called 2026 Tax Talk, I'm coming to you daily for 90 days, the first quarter of 2026, just really talking about different tax topics. And during the week, I have Tara in the comments. And so she is going to be moderating. If you have any questions, feel free to put them in the chat. If I can't answer them and get to the questions, Tara definitely will. So excited to have her with us today. She is an enrolled agent here at Hair CEO, so she knows her stuff. All right. So, like I mentioned, so working with this client, new client who needs to file an amendment. And the reason was because she received notification from the IRS that there was income that wasn't reported. And she was super confused because up until a few years ago, she was a stay at home mom. And I think 2, 3 years ago, she started her own business. Congratulations to her. And, she's been doing hair for the past 3 years. And she knew that she wasn't doing stuff right when it came to her taxes, but she just always thought that it was separate from her and what her and her husband filed every year. Turns out that it's not, and she had been going to a few different tax professionals, but nothing was really sticking. This industry, the hair industry, it can be a little overwhelming. A lot of tax professionals don't have the patience to deal with, clients who just need a lot of education when it comes to what you have to do. And so, because I come from this background, I come from this industry, this is what I love. A lot of times I'm able to connect with people in this industry because of that reason. And what I explained to her was that when you are married and you file a joint tax return and your spouse is a W 2 earner, then depending on how your business is structured, then your business income is going to be included on that joint tax return. And that's the missing part that she didn't understand. So a lot of business owners think, okay, when I have my business, this is going to be completely separate from my spouse. And in this situation, it was her husband. Her thing was, well, my husband has been filing us jointly. Now this is a new venture I started, so I have to do something completely different than what he's been doing, right? And a lot of times our spouses, if they don't have businesses, they're really relying on you as the business owner to know what your responsibilities are. So for him, he was like, listen, I know I have a W-2 job. I know I need to file these taxes. I don't know what you got going on now that you have a hair salon or a suite or whatever. All I know is that I need to file these taxes. And, he was used to filing jointly. And so he did as he was doing. But then came back around that, hey, I'm doing something wrong. So that's the first thing to understand is that depending on your tax structure, right? And the overwhelming majority of self-employed hair professionals are either sole proprietors or maybe you have registered an LLC with your state, but it's the default. Like you've done nothing else after creating that LLC, then if you are married and you're doing a joint tax return, then that business income is going to go on that personal tax return. So that is really important to understand. Another thing that comes up when I talk to people who are married and one has a business and the other one has W-2 income, the question becomes, well, is it beneficial for me to file jointly? Maybe I don't like. Maybe we should file separately because I have a business and like maybe we should just do different tax returns. I always tell people that it's almost always in your best interest to file jointly when you're married. And honestly, the tax code rewards you for filing married jointly. There are tax credits that are available to you when you file married jointly that you don't get if you file married separately. And so almost always it's going to work out in your benefit to file jointly. Now, you will want to check with your tax professional to see if, it makes sense for you, but I'm just telling you generally it's going to always make more sense for you to file jointly. But there are some times when it does make sense for you to file separate tax returns, but even when you do file jointly separate, it's still going to require that you know some information about your spouse. So this is going to be important. Um, so if you're filing married joint, of course, you're going to need to know your spouse's income, their W-2 income, and then you're still going to have a summary of your income and your expenses for your business. But what a lot of people don't realize is that when you are filing married separately, still some things that you have to know about your spouse. You have to provide on your tax return their social security number and their name. They have to do the exact same thing for you. They have to know your social security and your name has to go on their tax return. Another thing that is really important is that you have to know how they filed. You have to know, did they take a standard deduction or did they itemize? And again, I don't want to get into the technical things, but you need to know this as a business owner if you are thinking about, filing separately from your spouse. So really important that you understand this and know what information you need to get from your spouse. Now, you may be thinking, okay, well, what are the times when it would be beneficial? So some people who are legally separated, they don't want a joint tax return. I've seen that. I've seen some people, they're trying to avoid, um, back taxes, not back taxes, but like I've seen child support issues come up with filing jointly. And it's like, what, I don't want no parts of that. So we're going to file separately. But then also, this is a really big one. Those self-employed folks, which might be you watching right now, you haven't been doing what you're supposed to do during the year with paying estimated taxes. And your spouse is like, listen, I don't know what you got going over there, but I know that I'm going to get a refund. So I'm going to keep my refund and I'm going to file married separately. You go on ahead and you file by yourself and you be the only one who owes that money to the IRS and to the state because I've already paid my taxes. And that's a fair statement, right? Because if they have been doing everything that they were supposed to do, they had the W-2 job and they have their taxes taken care of. It's you, on the other hand, that might be messing them up. And so I do see that a lot. And so this is just another reason why you need to make sure that for 2026, we're done with 2025. We got to file 2025, but we're done with 2025. But moving into 2026, let's make sure you are doing the right thing so you don't mess up your spouse. Because again, it's always 9 times out of 10, it's going to be more beneficial for you to file jointly. And I'm a very practical person. Like I love and everything. I do. But there are some benefits that come with being married. And I'm all about the benefits of being married. So why not take the benefit of being married and filing jointly? Like, you're not even going to take one of the benefits of being married? Okay, I digress. so so that's one of the reasons, some of the reasons why people do file separately. Now let's talk about when you do have to file a separate business tax return, because there are situations. The first one is if you are a partnership, so you're in business with another person legally, or by agreement. Maybe there's no paperwork, but you and this other person, or more than one other person, are in a business together. Then you have to file a separate business tax return from your spouse. Yes, 100%. Or let's say you are taxed as a corporation, a C corp, or an S corp. Then you have to file a tax return that is separate from your spouse. And again, there are some nuances there, but this is not a tax class. This is just conversations about taxes. So you'll still want to make sure that you are working with a tax professional that can explain this to you, and making sure that you have the information that is unique to your situation, with you and your spouse. And if you are a self employed hair professional, or you have a hair business and you're looking for a good accounting firm, then I invite you to look at the description. I'm going to leave a link where you can get in contact with me, and someone from my team at Hair CEO, for us to work with you for 2025 taxes, or back taxes, or if you're watching this in the future taxes. I would love to help you, and talk about your unique situation and what needs to be done for you. And so, yeah, my name is Jennifer, and I am the founder and CEO of Hair CEO, helping self employed hair professionals and hair business owners run profitable, legitimate, and bankable businesses. And I will see you tomorrow when we have another topic for the 2026 Tax Talk series. I'll see you tomorrow.